Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the second day of our Metals and Mining Conference. Our first live presentation of the day is from Amerigo Resources. And Amerigo Resources is an innovative copper producer collaborating with Codelco, the world's largest copper producer. Please note you may submit questions for the presenter in the box to the left of the slides, and you can also view a company's availability for one-on-one meetings by clicking Book Meeting in the top toolbar. At this point, I'm very pleased to welcome Aurora Davidson. She's the President and Chief Executive Officer of Amerigo Resources, which trades on the OTC QX Best Market under the symbol ARREF and on the TSX under the symbol ARG. Welcome, Aurora.
Thank you very much for the introduction. We're happy to be here presenting in this conference, John. Okay, let me tell you about Amerigo. Amerigo is a copper producer, but we're not a copper mine. We call ourselves a copper factory, and as we go through the presentation, you will be able to see exactly where we differentiate 100% with a traditional copper producer. Go ahead. Overlooking presentation. Okay, so here is our value proposition. As I mentioned, we are a copper producer. We recover copper. We produce a copper concentrate in essentially a copper factory. We are receiving all the material from which we recover copper. That material is called tailings, and it is the waste product of a primary copper process. We are receiving it from the world's largest underground copper mine, which is Codelco's El Teniente mine located in Chile. Codelco is the world's largest copper producers. They have 6 operations. El Teniente is their flagship operation, and you will be seeing in the presentation later on what is the lifespan of El Teniente. In any event, we recover those tailings from them. They do a bypass into our facility, which is located close to the mine. We receive those tailings, we recover additional copper, we produce a copper concentrate, and then we return those tailings to El Teniente for their permanent deposit in their own tailings channel. We are directly levered to copper prices because the copper that we produce is sold at prevailing market prices. So we're not doing this processing and production of copper for a fee. We get to sell that concentrate at regular copper prices in the same form that any traditional copper concentrate producer does. We have minimal overhead and we have low capex because we have already done all the growth capex that was required in order to bring our production to target levels. We produce north of 60 million pounds of copper per year. For this year, 2025, we're guiding 63 million pounds of copper. So we've already done a substantial amount of investment in prior years in order to reach this production capacity. We're not in growth mode anymore because we've already reached our growth targets. So that has allowed us since 2021 to return capital to our shareholders, capital that is being generated through operational performance, selling that copper at a higher value than what it cost us to produce it. And so we are rolling out a capital return policy that consists of dividends and share buybacks. And we'll talk about a little bit more in the presentation. Our business model, by definition, is a sustainable business model. We are producing copper from a material that is already a residual material of a primary process. We only use renewable energy to do so. We have a very low water intensity. If you look at our website, we have our ESG scorecard there. That presents all the metrics of what impact we have from a sustainability perspective in producing this copper concentrate. So As I've mentioned, we are capturing lost value through our operations. Those tailings are already a residual material. We are recovering additional copper from it. We're doing that without any of the traditional mining risks. Our operation is essentially, as I mentioned at the beginning of the presentation, a factory, an industrial part of the copper recovery process. It is a less risky part of the traditional copper production process. And we're replacing the equivalent of a mid-sized copper mine. A mid-sized copper mine produces around 30,000 tons per year, which is around 63 million pounds of copper, which is what we're producing. So we're not a tiny operation. We are the equivalent of a mid-sized copper mine in terms of the production of copper that is generated from our operation in Chile. So how do we do this? Our business model is really very simple. In this schematic, you can see essentially the core of what our business process is all about. We are receiving the waste from one of Chile's largest copper mines. We are processing that waste in order to recover residual or additional copper. And we also recover molybdenum as a byproduct in that process. We produce copper concentrates for both copper and moly. We sell it to the market at prevailing market prices. And the fact that we are not in a high capex stage of our business cycle means that we have a substantial amount of free cash flow that is being returned to our shareholders. In 2021, we reached a milestone in terms of the levels of debt that we had. We had reduced our debt substantially. This debt was incurred basically to expand our operation without diluting our shareholders. So we were able to take on $100 million in bank debt that essentially is currently at 11.5 million. So a few years ago, we said, we've reached a level where we can start returning capital to shareholders, but we're in a cyclical industry. How are we going to do this in an efficient way where we can have a reliable and consistent capital return policy without being affected by some of the normal cyclicality that is embedded within the copper market? So we devised 3 tools. Those tools are the quarterly dividend. Then we said that we have 2 other tools, which are the performance dividend and the share buyback. So let me tell you about the quarterly dividend. That is the core of our capital return strategy. We have been paying 11 consecutive quarterly dividends. They are paid each quarter on the same dates in terms of record date, payment date, declaration date. So we have established a very consistent pattern of dividend payments for the quarterly dividend. You can count on that quarterly dividend to not change when copper prices change. We're paying 3 cents per share per quarter, and that has been a consistent payment. We started actually at 2 cents, and we increased that to 3 cents and have continued paying that, irrespective of copper price cyclicality. When copper prices outperform or are stronger than what we need in order to cover that quarterly dividend, we get into what we call additional distributions, and we have 2 additional distributions: the share buybacks and performance dividends, and we have been active on both. Initially, we started doing a significant amount of share buybacks. We have reduced our shares issued and outstanding substantially over the last 3 years. And last year, we also paid our first performance dividend. So people ask, what is a performance dividend? It's essentially an additional dividend, a special dividend that is tied to the outperformance of copper prices. To give you an example, last year, around May, June, copper prices started recovering substantially from prior levels, which were already very good levels, but we had a spike in copper price that allowed us to pay out in July of last year our first performance dividend of 4 cents Canadian per share. So as soon as the cash levels start building up, we are returning that additional cash to our shareholders. So the foundations of our capital return strategy are very simple. We don't require growth capital because we have already done that work. We've already grown to the level that we needed to grow. So that allows us to return that capital to shareholders. We have multiple tools to do that consistently and flexibly as well. And we're providing a best-in-class yield to our shareholders and quickly sharing the benefits of rising copper prices with our shareholders. We have been reducing our numbers of issued and outstanding shares, and we have used this strategy to become a preferred copper and also a preferred yield investment. This is our guidance for 2025. It was released earlier this year at the same time that we announced our production and operational results for 2024. Just as a side note, in 2024, we beat our production guidance. We beat our cash cost guidance. So we tend to outperform to our guidance, which is always good news in our sector. So for 2025, we have guided a production of 62.9 million pounds of copper, so essentially 63 million pounds of copper. And what I am showing you here is the leverage of what happens with our EBITDA and with our free cash flow to equity at different copper prices. So, for example, our guidance was built at a mid-size copper price of $4.15. At $4.15, we are guiding an EBITDA of $67 million and free cash flow to equity. That is the amount that can be distributed to our shareholders of 21.6 million. But that is a baseline. If you start doing your own personal analysis of where you think copper prices could be in 2025, then you see that you can be moving. For example, instead of considering a copper price of $4.15, you consider $4.30. That EBITDA rises to 71.1, and your free cash flow to equity rises to almost $25 million. So this is a very clear picture, and it has worked really well in prior years in providing our shareholders with a map of what could be happening in the year at different copper price scenarios. I talked about where we receive our copper from, the El Teniente mine, which is the flagship operation of the world's largest copper producer, Codelco, which is a state-owned company. As a matter of a framework, El Teniente has been operating since 1905, and it has a projected life of mine to 2082. How we get our tailings from them is through a series of agreements, a master agreement that allows us to have the rights to process those tailings, extract that copper, and return the tailings to El Teniente. For doing this, we pay a royalty to El Teniente based on copper prices, and we will see how that is structured later on in this presentation. So this is a long-term strategic agreement. Our operation in Chile has been doing this since 1992, and it has been a win-win agreement for both MBC, our operation in Chile, Amerigo, the owner of the operation, El Teniente, and in general terms for Chile, who gets to benefit from this additional copper production in its national copper production statistics. Okay, so Chile. Chile is a country that has, in our opinion, minimal jurisdictional risk. It is the world's leading copper producer. So they understand mining, they protect mining, they live out of mining. Copper is called the salary of Chile. So that gives you an idea of how important the copper industry is for the economy of Chile. We've had this relationship with El Teniente for 32 years. We are providing additional copper to Chile, and thus we think that the combination of the jurisdictional low risk of Chile plus the peculiarities of our agreement with El Teniente provide a very low risk framework in terms of elements such as resource nationalism, etc. Codelco is a state-owned company, and El Teniente is their most important operation. In terms of our corporate structure, this is updated as of last month. We have just shy of 165 million shares outstanding. We have options. We do not have warrants. Our options are basically to directors, managers, and both in Chile and in Canada. Our share price, closing share price as of last month was $1.66 Canadian. And that represented a yield just in the quarterly dividends of 7.2%. In 2024, we returned $21.2 million to our shareholders through our three tools: the quarterly dividend, that performance dividend, and share buybacks. We have reported our production and operational results for 2024. We are presenting our financial results in 2 more weeks, but we have already disclosed publicly what our level of cash and debt were at year-end 2024. We had a cash position of $40.3 million and debt of $11.5 million. Okay, and this is the summary for 2025 of how the royalty to El Teniente works at different copper prices. I mentioned that we have that we pay this royalty as consideration, as payment for having the rights to process their tailings. We work with 2 types of tailings. The fresh tailings are the tailings that are coming from the daily production of El Teniente. They are the lion's share of the volume that we process at our facility. And for fresh tailings, we have a scale that starts at $1.95 per pound copper, ends at $4.80. And we also process tailings from a deposit called Cauquenes. These are older tailings that were deposited by El Teniente in decades. They have higher copper grades, and we have a different royalty structure for them. Basically the same floor at $1.95, but it has a higher top range at $5.50 copper. We have been close to being over $4.80 per pound, and people have asked what happens after you surpass that $4.80 limit. The answer is simple. It's already happened to us before when we had to work outside of the scale for our molybdenum royalty. We sit down with El Teniente and we extend the slope of the scale to continue paying a royalty under the same sort of sharing of benefits idea with them. So it hasn't happened to us yet in copper. It could well happen. We were very close to that occurring last year. So for example, at let's say $4.20, which is quite close to what we have today, we pay to El Teniente a royalty of $1.27 per pound of copper produced. I mentioned that we also produce molybdenum, moly, as we call it, just to sound less formal. Moly is a metal that can have significant variability in its price, but it has been sitting at around $21 per pound for the last 2 years or so. If you look at what that means to our operation, it means that, let's say at $22 per pound moly, we are capturing a benefit, a reduction to our cash costs of around 36 cents per pound of copper produced. So it is not a life-changing element of our operation, but it's something that is very welcome when moly prices are in similar ranges to what we have seen in recent years. It provides an additional layer of benefit that contributes obviously to the EBITDA and the free cash flow to equity that we were discussing before. In terms of management, we have a very lean structure. We essentially have 4 people in our management team in Canada. The founder of the company, Dr. Klaus Seidler, is our chairman. Myself as CEO. Carmen Amezquita is our chief financial officer. And then we move down to Chile, where we have a team of top-notch operators led by Christian Cáceres, our general manager at MVC. And in terms of our board of directors, we have a multidisciplinary board of Chileans, Americans, Canadians. And that ends the presentation, Graham, and we are open for questions and answers.
Thank you, Aurora, and thank you everyone for joining us today. We do have some questions. We have just under 10 minutes, so we'll try to get through these questions as best as we can. I will keep everyone's name anonymous. And we're going to start with what is your copper outlook? Sorry, what is your outlook on copper for this year, Aurora?
That's a good question, right? The consensus for copper prices for this year, as we started, was $4.36 per pound of copper. I always talk about the LME market. That's where we sell our copper. There's currently a bit of a disconnect between COMEX and LME, but most copper producers think LME, London Metal Exchange, when you're thinking copper. So the consensus was 436 for this year, but it usually is a conservative consensus. Just for example, last year, I think the consensus was 389, and the actual average on the LME was 415. So if I follow the same logic, I can tell you that my outlook for this year is that we will beat consensus of 436.
Perfect. Thank you. Next question. What are your key initiatives for 2025?
The key initiatives are basically spelled out every year in our guidance. I think that's our most important news release of the year. We report what we produced last year, but we also produce a very detailed set of goals for what we expect to do in the current year. So we have guided for copper and moly production, 62.9 million pounds of copper, 1.3 million pounds of moly. We have guided a cash cost of $1.93. So those are very precise numbers. We have also produced a guidance for our CapEx. We're guiding for $13 million in CapEx, which includes $4.4 million in 4 process optimization projects. We have been working on similar projects in recent years, which continue to give us the benefit of always being able to exceed our production guidance by a little bit as those optimization projects come online. And a significant milestone for this year is that we expect to be debt-free by year end. We don't have a significant amount of debt. We're at 11.5 million, but we will be repaying that debt fully this year. And that will give us the ability essentially to have significant more flexibility in respect of free cash flow to equity as of 2026. So those are the key initiatives, Graham.
Perfect. Thank you. Can you please explain the performance dividend and when you would use it?
The performance dividend is essentially a bonus dividend tied up to copper prices. We use it when copper prices have spiked up beyond what we had expected in our budget, in our guidance. And essentially, it is a special dividend that is totally isolated from the quarterly dividend in terms of the amount, the timing, the periodicity of it. So it's just a bonus to return that boomed on copper prices to shareholders as quickly as possible.
Perfect. Thank you. What is the biggest challenge to your business?
The challenge to the business is to continue to produce consistently and to continue to meet our goals as closely as possible. It is a business that sounds almost like you're just, it's an easy business. You're just producing copper in your factory. There are a lot of moving pieces. We have to have a substantial amount of care in respect of environmental obligations. We have more than 300 regulations that we have to follow, that our team has to be aware of. We have to work safely. We just reached 3 years without any lost time accidents at MBC. So it is a business that works like clockwork based on the daily care and input from the people at the operational level. And the challenge is to keep those high standards going, to not fall into complacency, and to ensure that we continue to deliver, because the room for error is very narrow. You cannot have any errors almost in the business. It's a marginal business. It is a very regulated business, so you just have to be 100% on your element to make it work.
Great, thank you. There are a few questions about growth, so we can just maybe summarize about what does your competition look like and what are your plans for growth?
Well, we don't have competition in terms of there is no other company that is producing copper exclusively from tailings. We're the only operation that's doing that in the world. That probably has to do a lot with the synergies that were established initially with El Teniente, their interest in working with something that most miners have always considered waste, and which they saw as an opportunity that has benefited them and us significantly over more than 3 decades now. In terms of growth, we have grown the operation at MVC as much as possible. We're processing all of the fresh tailings that come from El Teniente. We are processing an additional layer of historical tailings. So that objective has been met. And the continued focus on growth is, how do you grow your financial margin? How do you continue to operate efficiently? How do you manage your cash costs so that it's not just production growth, but at the end of the day, economic growth that you can return to your shareholders? That's our definition of growth. What is the return on investment on an Amerigo share? It has grown significantly over the last 5 years. And it hasn't been tied necessarily to production growth. There are other elements around it that have made this possible.
Thank you. And I would encourage everyone who's interested in the growth aspect. We do have videos on our website that explain that in more detail, and they're very good. We're not going to get to everyone's questions. We have 2.5 minutes left. We do have a lot, so thank you for that. I'll do my best here. Can you talk about your contract with El Teniente in terms of how long it runs for and how it would be renewed?
Our contract currently has a termination date of 2037. That doesn't mean that the curtain drops in 2037 and we go home. Our prior date of termination was 2021, and 7 years before that termination date, we extended our contract. We expect to do the same. This is a win-win relationship with El Teniente, but we still have 12 years ahead of us in that contract, and a lot of time to do that extension.
Perfect. What is the level of Amerigo's exposure to any potential U.S. tariffs extending to copper exports from Chile?
We are selling our copper in Chile. All of the copper that we sell actually to Codelco in Chile. So it is a domestic sale for us, and in that sense, it wouldn't be affected by any tariffs.
Perfect. Thank you. Your guidance, the guidance you provided calls for 67 million of EBITDA this year. What are Amerigo's capital allocation plans for 2025? And we have 1 minute left.
The capital allocation plans were also set up on our guidelines. We're reducing our debt. That's 11.5 million. We are spending 13 million in CapEx, including sustaining CapEx, spares, growth, optimization CapEx, and the rest of that is free cash flow to equity.
Perfect. Then we'll take one more. And I remind everyone we're available for one-on-ones through this conference and through the channels on our website. Do you possess proprietary extraction technology, and why did your partner choose to sell tailings to you?
It is not proprietary. We work with traditional technology, flotation grinding. They have partnered with us because they are one of the biggest mines of the world. They have bigger fish to fry. This is a residual aspect of their operation, but still, it is a significant operation in and by itself, just on the waste processing of it.
Perfect. Thank you. I believe we are out of time. Thank you for everyone for joining us, and we are available if you do have further questions.
Thank you.